My last video covered adjusting entries. It's possible that your instructor may require of you to analyze the impact of omitting adjusting journal entries. I'll show you how to discern these effects here and now. Remember our four types of adjusting entries: prepaid expenses, accrued expenses, unearned revenues, and accrued revenues. If you're unfamiliar with these types of adjustments, feel free to watch my previous video on the subject. I'll provide a quick review here. With prepaid expense adjustments, we're expensing a portion of our own asset that we've consumed. Consequently, we'll debit an expense and credit an asset. In the case of depreciation, we credit accumulated depreciation, a contra asset account. With accrued expenses, we have consumed a service from someone else, so we'll still debit an expense, but we'll credit a liability indicating that we owe a third party a future payment. For unearned revenues, we've satisfied a service we owed to someone else, so we'll debit unearned revenue, a liability account, and credit a revenue account. Finally, with accrued revenues, we've earned money from someone else who has yet to pay us, so we debit a receivable and credit a revenue. Let's examine how our financials are misstated if we overlook booking any one of these types of entries. We'll start with accrued revenues, since this entry is very easy to follow. I'll use the adjusting entry from the previous video to maintain consistency. Think about the order in which we build the financial statements. First, we start with the income statement, which is our revenues less expenses to arrive at net income. If we fail to put the revenue from this adjustment to our income statement, revenues will be understated. If revenues are lower than they should be, net income will be as well. Next, we build our statement of owner's equity, in which we start with beginning owner's capital, add in our contributions and our net income from the income statement, and subtract drawings. The understatement of net income will flow through here, causing ending year's owner capital to be understated as well. Next, we build the balance sheet. We pull over our owner's capital from the statement of owner's equity, which was understated. If equity is understated, we need either an overstatement in liabilities or an understatement in assets. You can discern which by looking back at the journal entry. We were supposed to debit AR, which would have increased an asset. If we fail to increase AR, it's our assets that will be understated. You can also analyze this effect by using our accounting equation. Our debit to AR would have increased our assets. Without it, AR is understated. Similarly, our credit to fees earned would have increased our equity. Without it, equity will be understated. Consider unearned revenues next. We can trace the consequences of omitting this journal entry through the financial statements just as we did with accrued revenues. Just as we saw previously, if we fail to record the fees earned from this journal entry, our fees earned will be understated on the income statement, which will lead to an understatement in net income. When we build our statement of owner's equity, our net income from the income statement will be understated, which will understate ending year owner's capital. This error will flow through to the balance sheet. If our equity is understated, we need either an understatement in our assets or an overstatement in our liabilities. Looking back at the entry we were supposed to book, the other side of it was impacting a liability. So that's where the other side of this omission shows up. If we examine this via the accounting equation, the debit to unearned revenues would have decreased liabilities, so its absence will have the opposite effect. The credit to fees earned would have increased equity, so that omission results in an understated equity. With the expense adjusting entries, things are a little more nuanced, but not by much. Let's examine our accrued expense adjustment. When we build our income statement, having an understated expense will overstate net income. The two have an inverse relationship. If we understate those expenses by $540, net income will be higher than it should be because we reduced revenues by less than we should have. That overstatement in net income will carry through to the statement of owner's equity. Net income will be overstated here, which will overstate the ending year owner's capital. We then see this misstatement on the balance sheet. Owner's capital will be overstated in the equity section. If our equity is overstated, we need either an understatement in liabilities or an overstatement in assets. The other side of the entry that wasn't recorded was a payable, or a liability. That tells us that it's the liabilities that will be understated. If you need further confirmation, write out the accounting equation. The debit to expense reduces equity, and the credit to payable increases the liability. So if we don't record this entry, equity will be overstated and liabilities will be understated. We'll observe a similar phenomenon by failing to adjust a prepaid expense. By omitting supplies expense on our income statement, total expenses will be understated, meaning net income will be overstated. That overstatement in net income will carry through to the statement of owner's equity, causing ending year's owner's capital to also be overstated. When we build the balance sheet, owner's capital will be overstated in the equity section. To remain in balance, we need either an understatement in our liabilities or an overstatement in our assets. The other side of the entry that wasn't recorded was supplies, an asset. That tells us that it's the assets that will be overstated. Verify this fact via the accounting equation. The debit to expense reduces equity, and the credit to supplies reduces assets. So if we don't record this entry, both equity and assets will be overstated. That concludes this very short video. I hope it was beneficial. My next one will go over the closing process. It'll be a good way of summarizing everything I've discussed so far in this series, so be sure to catch it. In the meantime, if my videos are helping you and you want to return the favor, you can leave a thumbs up. If you have any questions or suggestions for how I can improve, leave them in the comments below. If you really want to help, temporarily subscribe to the channel. Not forever, just for however long you're taking your accounting course or courses. Finally, share my videos with your fellow classmates and possibly your professor. I'd like my videos to help as many students as possible, and I wouldn't mind getting some input from contemporaries. Thank you once again, and I'll see you in the next one.